people should be buying, I think, silver now more than gold. I do think that what we've seen, if this is the beginning of an unraveling rather, of that gold silver spread, then that's bullish. Because I think when people start getting bullish on silver, it's because gold and silver are going up. I think it's a much stronger bull market when you have silver leading the way. And I think maybe we're going to be entering that.
Although silver's sell-off is disappointing, many analysts recommend that investors look beyond the short-term volatility and remain focused on the long-term picture. A growing chorus of analysts are extremely bullish on silver as demand continues to outweigh supply. Many analysts expect silver to outperform gold eventually, but investors must be patient. Well-known expert and trader Peter Schiff believes that the recent rally of silver was partially driven by the unwinding of gold-silver spread trades, where traders previously traded long gold and short silver. Despite this, Schiff remains bullish on silver, arguing that it is significantly undervalued relative to gold and presents a strong buying opportunity. Silver prices hit their highest since late October on Friday, latching on to factors that drove gold to successive record highs, with some analysts suggesting investors in the metal may aim to challenge a 10-year high just shy of $35 per ounce. From a technical perspective, Schiff analyzes the latest inflation data, noting that both CPI and PPI came in hotter than expected. He noted that annualized inflation would be around 6% if this trend continues, far from the Federal Reserve's 2% target. Despite this, gold held firm, suggesting traders may realize that high inflation is bullish for gold. The CPI rose 0.5% in January, surpassing expectations, while wholesale inflation, measured by the Producer Price Index, climbed 3.5% year-over-year. Both readings suggest inflationary pressures that could keep the Federal Reserve cautious on rate cuts. Gold may face resistance at current levels if inflation shows signs of cooling. However, persistent price pressures and trade-related uncertainty provide a strong foundation for continued upside. Traders should remain focused on upcoming economic reports and any shifts in Fed rhetoric to gauge gold's next direction. Regarding gold mining stocks, he acknowledges Friday's sell-off but expects a rebound as earnings remain strong. Schiff predicts inflation will stay elevated, and silver could surge past $50 given gold's current price. He strongly recommends buying silver over gold at this time. Now, we present the clips of Peter Schiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
So we got the producer prices that came out. Remember, we got a much hotter than expected CPI, and that was followed up on Thursday by a hotter than expected PPI. We were looking, or they were looking, not we, but whoever these analysts are that are forecasting, they were looking for an increase of 0.3 for the month of January. And instead, we got an increase of 0.4. But even worse, the prior month, December of last year, they initially told us that prices were up by just 0.2. Now they're telling us that they got it wrong. They were up by 0.5. That is a big upward revision to the prior month. That's a big number. Again, you annualize 0.5, you're at 6%. Nowhere near this BS 2% target. The year-over-year producer price number, which was supposed to be 3.2, was 3.5. And the prior month's year-over-year number was revised from 3.3 to also 3.5. So you've got hotter than expected numbers. And when you take out food and energy, it's even worse. When you look at the core, which is supposedly more important to the Fed, that was supposed to be 3.3, and instead it was 3.6. So that is a big number. So this is bad news. And once again, gold did not sell off on this bad inflation news, and neither did gold mining stocks. Right? You know, they hung in there. And the point I made on Wednesday, when gold shrugged off a $40 sell-off to close positive on the day following the CPI, was it meant, hey, maybe traders are getting this, that higher than expected inflation numbers are not bearish for gold. They're bullish. A lot of people, I think, have been long gold and short silver as a spread, thinking that, look, you know, if gold goes down, silver will go down more. And if gold goes up, it's been going up more because the ratio has been moving in that direction. So rather than just being long gold, I'll be long gold and short silver. And in case the market goes down, I can make money that way too. But I think that it's been so stretched where the ratio has been more than 90-1. I was talking about this on the last couple of podcasts. I've been telling people, look, buy silver. And I still think that you should be buying silver over gold right now. right? Even though I'm a gold bug, silver is really cheap in terms of gold. And so it looked like we were getting a unwinding of that spread. And I think that's what happened. But then as gold started to go down, it cascaded and gold went to down $45 and silver went from up $1.10 to unchanged, right? I think it ended up the day flat. Now, it still was a gain in gold versus silver because, normally, or not normally, but in recent times, if gold was down $45, silver would have been down $1, maybe more. Instead, it was flat. So I think there was some unwinding going on throughout the day, but that unwind caused gold to go down. And it also caused the gold mining stocks to get clobbered. I mentioned we had that outside reversal day on Wednesday, and I thought that meant that we would just be going up from there in gold stocks. And instead, I got it wrong because we got clobbered on Friday. Now, I don't think it changes the trend at all. I think it kind of was a buy the rumor, sell the fact, even though I don't know how many people were buying the rumor. But we did get 4 major gold companies that reported earnings. 3 out of 4 beat the earnings estimates. But all 4 had great earnings compared to what they were earning a year ago. And the price of gold is already much higher than it was when they earned this money last quarter. But I think that, we had a rally. I mean, gold stocks were up maybe 20% or so on the year. Now, compared to where gold is, they should have been up much more than that because they got clobbered at the end of last year for no reason other than Trump winning and gold having a small correction of maybe 7% at max. But that sent gold stocks plunging into bear market territory. But I think a lot of people realized that they were going to beat on earnings. And so when they did beat on earnings, the stocks got sold. But I think that's just a temporary move. I think that probably starting this week, people who sold those stocks are going to be buying them back because the outlook for the gold mining sector, I think, is phenomenal. We're going to get a lot more earnings coming out between now and the end of February.
Seasoned analyst Peter Schiff discusses the recent surge in gold imports to the U.S. as buyers aim to get ahead of potential 25% tariffs. He warned that gold prices would rise significantly if these tariffs were implemented since producers wouldn't absorb the cost. With settlement day fast approaching on February 26th, COMEX is stockpiling gold at an unprecedented pace. London is running short, and overnight leasing rates for gold have surged as high as 12%, indicating supply stress. Traders increasingly demand physical delivery rather than settling contracts in cash, an unmistakable signal that confidence in paper gold is eroding. The stakes are rising with Trump's tariff barrage, which is adding another wild card to global markets and central banks, particularly in the BRICS, accelerating their accumulation of gold reserves. If COMEX is hoarding, they're not doing it for nothing. Something big is brewing beneath the surface. As per Schiff, investors should buy gold and silver before prices increase due to tariffs and growing demand. Even if tariffs don't happen, he believes buying now is still smart, given the bullish outlook for precious metals. Let's get back to the interview.
A lot of gold has been coming into the United States, a lot of it coming in from London. And the reason I think you're seeing a rush of imports is to get ahead of these tariffs, because the tariffs would apply to gold. And a lot of the gold that Americans might want to buy is going to be imported. America produces gold. We're the 5th largest gold producer in the world. Number 1 is China, right? They're pretty much number 1 in everything. Number 2 is Russia. Number 3 is Australia. Number 4 is Canada, and then the United States. But if gold demand really picks up, which it should, we won't be able to meet it with our domestic production. And so we're going to need imports. Well, if there's a 25% tariff, who's going to want to pay 25% more for their gold? So the idea is, let's bring the gold into the country now so that we don't have to import it. Well, I would suggest the same thing for our customers at Schiff Gold. Don't wait to buy your gold after there's tariffs. That's the worst time to buy it. It's going to be tough, So if you want to have physical possession of gold and silver, buy it now, not only because the price is going to go up, but because the tariffs may go on. And of course, the gold producers are not going to eat those tariffs. Tariffs for sure will go dollar for dollar. So if Trump imposes 25% tariffs on gold, any gold coming into this country is going to be marked up by $25. Otherwise, it won't come in, because nobody in Russia is going to sell gold to America for $1 less than they can sell it in Europe, right? The price is the price. And so if we want to tax Americans $25 to buy Russian gold, then they're going to pay $25, 25% more than what the Europeans are paying for the same gold. So the idea is to buy it now. And the same would be true with silver. Now, I guess if you're buying like junk silver, obviously that's not imported, but that's, when you're buying junk silver, that's a used product, right? By definition, right? You're buying it from somebody who's selling it. But if there's a 25% tariff on silver coming in, that's going to cause a big premium in junk silver, because people buying junk silver, or anybody who's buying, a used silver product that's already in this country, they're going to be able to charge more because it's not going to be competing with the new products that are being imported into the country. So the big guys, the institutions, are trying to jump ahead and they're buying their metal now. I would suggest that, my followers, customers, Schiff Gold, do the same thing, except more so with silver. Buy your silver now. Maybe there'll never be tariffs. Well, it's still cheap. You should buy it anyway. Even if you didn't have the threat of tariffs that were going to make physical gold and silver a lot more expensive, you'd want to buy it anyway. So now you got another reason, right? You can kill two birds with one stone. You can get into silver before the price goes up, and you can beat the tariffs. And if it turns out there are never tariffs, well, then you still did the right thing by buying it. And the fact that we did get this sell-off, it may have been off to the races on Friday. After it was up $1, maybe it would have gone up 2 or 3, and who knows? The fact that it came down, that's a good thing if you want to buy some silver. I had no intention of selling any of mine, so it doesn't matter to me. And I got a lot of followers who would like to buy more silver. So I'm happy when anybody is dumb enough to sell it, because that means my clients can take advantage of that and buy it.
Given the current market dynamics and long-term trends, silver is well positioned to experience material gains and merits close consideration from investors seeking portfolio diversification and upside potential. It's difficult to be bearish on gold and silver when solid long-term demand provides significant support in the marketplace. Do you believe silver could touch new highs based on supply constraints and potential tariffs? If so, what factors could accelerate this move, and how should investors prepare? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.